Thank you, Neilton. Well, we're in the final trading day of January, and definitely, if you've been able to book some good profit in January, congratulations. But if you've not, then February might be your month. Good morning, good evening, wherever in the world you're watching from. It's Business Morning coming to you live right here from Channels HQ. Well, first off, let's get the stories that set your agenda now. We see the Central Bank of Nigeria has announced the settlement of all verified Forex claims by foreign airlines operating in the country, with an additional payment of $64.44 million, bringing total disbursements to foreign airlines about $136 million. According to the CBN, this development underlines the bank's commitment to resolving outstanding FX obligations across all sectors. Meanwhile, in a statement, the International Transport Association, as IATA, says it welcomes the central bank's announcement. IATA stresses that while the release of an additional $64.44 million is encouraging, it is still a long way to go in addressing the full issue. It was about $700 million. It remains blocked in the country's commercial banks. And yeah, definitely, the Naira, again, back in the news. Another headline, a new low at this point, sank to about 1,482 Naira per dollar, following strong demand on the official market. And you see it's down about 9.03% in the official window. But here's the twist now. You know, normally we're used to the parallel markets, being weaker, but this time it's the official window that's weaker. See the BDC there, 1,455 Naira to the dollar. A 0.34% depreciation. So we see that spread there. We're not used to that, and definitely be looking out for what happens. For the intraday high and low, the spread was still quite significant. To see for the peer-to-peer markets there, and definitely we've heard there's a change of methodology for how they capture the price in the official window. So that's where we're seeing now, I guess, more weakness in the official window compared to the parallel market. But definitely be looking out for how the Naira closes. We do know the central bank is working hard to, clear off all of those backlogs, at this time. So for some outlook, we know January is a month of outlook. See, the International Monetary Fund has downgraded Nigeria's economic growth projections for 2024 to 3%. From 3.1% it had forecast in October last year. The IMF disclosed this in its latest World Economic Outlook update, where it estimated that Nigeria's economy grew by 2.8% in 2023, a slight drop from the 2.9% projected in October. At the same time, the international lender expects Nigeria's economy to grow by about 3.1% in 2025. Meanwhile, IMF's 2024 projection is below the federal government's expectation of 3.76%. In its October updates, the IMF stated that Nigeria's slow growth will be because of weaker oil and gas production, and we'll definitely be discussing that later on in the show. But barely a month after commencing operations, Africa's largest private refinery, Dangote Refinery, is set to begin importing crude from the U.S. in coming weeks. According to a report by Bloomberg, the refinery has ordered 2 million barrels of WTI Midland from the United States-based oil trader Trafigura Group for delivery in February. This significant development comes as a $20 billion mega facility has so far received up to 4 crude oil shipments from several sources, most recently from the Nigerian National Petroleum Company Limited, NNPCL. Dangote Refinery, which has a capacity of 650,000 barrels per day, is expected to help Nigeria reduce its reliance on imported fuel. But I guess at this point, if the Dangote Refinery has to import oil, who knows if that's going to help with affordability. Hopefully, we'll keep watching that. To the oil market now, oil prices fell today due to lackluster economic activity in China. We know the biggest buyer of oil there. We see Brent down 0.3%, $82.60 a barrel this morning in early trade. And the cheaper version, WTI crude, which is the one Dangote is going to be importing, We see that's at $77.59 a barrel. Not 0.3% drop there. So we're still seeing that volatility, play out in the oil market. Supply concerns, demand concerns, all of that interplay, moving prices in the oil market. Well, we'll take a quick break now. When we come back, we'll be just looking at Nigeria's oil refining outlook in 2024 and beyond. That's our next conversation. Do stay with us. Now, let's go deeper into Nigeria's oil and gas industry. In the 2024 budget, the government targets about 1.78 million barrels of crude oil production in 2023, and average daily output of crude oil and condensate by November 31st was about 1.46 million barrels per day. But we see what most of the refineries, some that are existing and coming on stream, at some point, we see the amount of crude that will be needed. We see the Dangote refinery there needs about 650,000 barrels per day of crude. Port Harcourt refinery, 210,000 barrels. Warri and Boa refinery, that's going to be coming up at some point. That's going to need about 200,000 barrels per day of crude. Let's bring in Mr. Nick Agule now, oil and gas expert, joining us from Makudi via Zoom. Great to have you on the show.
Good morning, Vladi. How are you doing?
I'm great. Thank you so much for joining us. So we see the federal government is targeting about 1.78 million barrels per day of crude output in the 2024 budget. As it stands now, is it achievable? And what should be done to actually make this happen?
A very good question. So Nigeria has a budget problem, like you have said. We have budgeted 1.748 million barrels per day with the budget. Current production levels are about 1.3 million barrels. So the revenues that are coming in are below the budgeted benchmark. Question is that the 1.748 million barrels projected achievable? The answer is yes, it's achievable. Let's not forget, Nigeria produced 2 million barrels of oil previously. That means there is a stored capacity to produce 2 million, if not more. And all that it needs then is for the operators, with the active support of government, to go back to the levels at which we were producing previously. Fields are there, the reserves are there, the surface infrastructure is there, pipelines are there, terminals are there. The reason why we are not producing 2 million barrels are essentially because insecurity, number one, and insecurity also leads to pipeline shutdowns when the guys who are cooking in the Niger Delta puncture pipelines so that they can extract the crude. If we take care of security, fix the pipelines, and then bring on stream fields that hitherto have been shut in, I can't see why we will not do 1.7.
And definitely, when it comes to getting crude, to these to the Dangote refinery, we also have some other refineries, that's supposed to come up, at some point. We have the Port Harcourt refinery, Kaduna refinery, Warri, and Boa. We see all of this. 650,000 barrels for Dangote, Port Harcourt, 210,000 barrels per day. This is the amount of crude that will be needed, for these refineries. And that's coming up to about 1.something million if you add all of that together. So I'm trying to imagine a situation where all these refineries, come on stream, and seeing that Dangote refinery is having to import WTI at this time. Do you think we can meet supply of the refineries if they all come online, at some point?
It will be a very good thing that Nigeria is able to refine all of the crude that we produce in Nigeria. And the numbers you have there on the screen will indicate that if all these refineries should come on stream there as we speak, then it means that the totality of the crude production that we're making in Nigeria will be fed into these refineries, value added, jobs created, and then we consume locally, and the balance we export. That's actually the position where Nigeria should be, where we should be adding value to crude before we export it. However, the market, the crude oil market, don't actually just work like that. I believe that some Nigerians will be shocked to hear that Dangote refinery has gone as far as the United States to go and import crude oil. And the reason is because crude is sold ahead before production. So you have the futures market, and you will see that the operators in Nigeria today would have already committed their crude months and years ahead. And so even Dangote, a local refinery, comes on stream, these operators will be hamstrung to divert their crude from the contracts that have already entered into and channel it into Dangote refinery. So what has happened clearly here is that Dangote was not able to get all of its crude requirements from the local market. That is why it has gone over the United States. But I believe that now that the refinery is on stream and they are now in the market shopping for crude, they will be able to enter contracts with local suppliers who will be able to give them possibly a sufficient amount of crude oil, or whatever is left to be imported will not be significant. That's the way the crude markets work. And then we hope that Nigeria will be able to raise production back to the 1.7 of the budget, or even 2 million barrels, if we take care of the underlying issues that are pinning down production.
We also know that, some of our oil under the ground now that's supposed to be produced at some point, most of them have been pledged for, loans already sold, in most of these futures contracts. So at this point, is it time to stop selling future production or future output? What do you think?
Yeah, so there's the thing about the Nigerian oil and gas industry. There are all sorts of operators. You have the international oil company, the IOCs. Then you have the local or indigenous producer. Then you have the NNP, which is the government-owned business. They are producing B2B, but they also have joint ventures with international oil companies. So for the international oil companies, you will realize that for most of them, whatever is their share of crude oil, they are putting that crude oil through to a refinery that is owned by them somewhere in the port. So when Shell takes its own share of crude oil in Nigeria, it's already committed to a share refinery somewhere in the port. And that cannot be broken only because Dangote refinery has come on stream. Because they own the crude. It's theirs, and they can decide on what to do with it. Instead, there is some sort of moral situation for the government to say, hey, you need to give some crude to local refineries. But outside that, the private operators will, sell their crude or put their crude where they are already connected. It's the NNPC who takes Nigeria's share of the crude, where government has power to decide on what happens with that. The government now says, no, NNPC do no longer put Nigeria's crude into futures contract ensure that the local refineries are sufficiently supplied, then that's a statement or a stand that the government can take. Because of what need would Nigeria be exporting to, what Dangote and the other refineries are exporting to? At the end, we're just going to suffer the logistics cost, which would have been avoided entirely if crude in Nigeria was piped into the government.
All right. Well, definitely. There's so much to unpack, but I'm sure we'll be able to get you at some point, the studios, so we can have a seamless conversation. Thank you so much for joining, Mr. Nick Agule, oil and gas expert, joining us from Makadi. Thank you so much.
Thank you, and have a nice day to all.
Thank you. All right, we'll take a quick break now. When we come back, we head straight to the markets. The final trading day of January. Let's see what happens next in February. That's our next conversation. Do stay with us. Let's get a check on the local bourse now from yesterday's close. For the first time since January 10th, 2024, the NGX closed in bearish zone as the all-share index declined by about 1.5%. If you take a look at the numbers there, 103,000 points, but still above that 100,000 mark. So it's the first pullback in about 20 days, 1.49% drop. And we see the market cap, total capitalization there at 56.42 trillion. Let's look at the trading volume and activity now. We see it's lower than what we had the previous day for volume. 648 million is down about 5.94%. We see value there, 11 billion. That's what was traded, down 57%. And deals 14,000, definitely less than the previous day. Let's look at sectoral performance. Let's see how that's looking. We know the banking counter is still on that massive, big drop there for the banking counter, 6.73%. We saw all the tier 1 banks down big 9%, 8%, and we saw some tier 2 banks also hit hard there by profit taking. Consumer goods 2.59%, all red, and the insurance counter. That was also the financial services. That's now 6.44%, mirroring what we saw with the banking counter. Industrial goods, that's been the shiner for 2024 in January, because this market, this sector has been up big jumps so far, with the cement giants always propping up that counter, propping up the whole market. We're seeing some profit taking there, but not as big as what we have in other counters, 0.39%. That's the drop. So let's bring in Mukhtar Mohammed now, financial market analyst, join us via Zoom. Great to have you in the show, Mukhtar.
Thank you, Ladi.
Yeah,
so having me.
Yeah, fantastic. So we're seeing a drop now, first one in about 20 days. So the question now is this the beginning of a major correction or just a healthy pullback?
Ladi, I don't know why people talk about correction. Correction is when you think the violation is very low. Too high to meet up. But I think what we are seeing a little bit of pullback. I don't think it's market correction. It's just a little bit of pullback. And like you said, the volume is still low. The volume is not as the volume that we saw in maybe a lot of people are trying to sell the previous day. So the volume is still low, so there's still a lot of opportunity there. So I don't think so. It's a pullback, and it's a pullback that will create opportunity for people that have lost entering maybe the previous one to begin to look at how to strategize later. Not to forget that the earnings season is approaching, and these 4 major banks that you saw those pullback from and are banks that would definitely pay good dividend to their investors.
Yeah, and looking at the banking counter, it's been on a steady, downward trend. We've seen a lot of profit taking, on that counter. Do you think there's still more downside, coming for that banking counter, or is it time to buy the dip?
Well, I think it's depending on what strategy you are adopting. I don't think it's time to buy the dip, because you need to look at which of the banking sectors have gone, or were they really were they overpriced and stuff like that. But I think for the tier 1 bank, there's still a lot of opportunities there. Again, like I said, depending on your strategy. If you're somebody that thinks that cash is king in an economy like this, especially when the economy has some drawback like what we are seeing in Nigeria, then you need to jump into those banking stocks to get those good dividend payout that we think they would definitely pay. So that's a good. That one is good for those investors that are looking for cash. But again, if you're an investor that are looking for capital appreciation, you're not the type that's waiting for the dividend payout. And those are the investors that are actually pulling back down, now bringing down those prices there. It's not the best time for you to enter. Maybe wait until after the results have been released, then you strategize to re-enter, especially when you are awaiting the first quarter result. So it depends on your strategy.
Yeah, and definitely being an investor, in this market, definitely not an easy time. Having to deal with currency devaluation and rising inflation. So your cash is actually losing, value. So at this point, some investors might say, what, let me stay in cash. But that's getting ripped off by inflation and, currency devaluation. So what do you think is the best strategy, for 2024? Knowing that this market has been in a bull market for a while now, and there's a risk that there might be a major pullback, at some point. What would you say is the best strategy to hedge against inflation and currency devaluation in 2024?
Yeah, Ladi, I need to make a point clear. When people talk about currency devaluation, and when people talk about holding the dollar comparable to the Naira, I have this analogy that I keep saying: the only time the dollar makes sense is when you convert it back to the Naira. Any dollar that is not giving you a return up to like 4 to 10% is definitely not your dollar value is going down. The only time you see the value of the dollar goes up is when you exchange it to the Nigerian Naira, and when you are about to do business in Nigeria. But if you are doing business outside the shore of this country, the value of the dollar, once you are not adding anything to it, then it's going down. So now, what is your strategy? Like I said, liquidity is king in any economy. And so when you have this liquidity, sometimes they help you to take advantage of cheap assets. And those cheap assets will come in when there is a pullback, like what you are seeing now. So if my strategy is, if I'm looking for ways to buy more assets, then I think of having more liquidity. I won't keep my Naira just lying down fallow. I will try to use my Naira to buy cheap assets because of the devaluation of the currency. Because now that means some of the assets are cheap. And now when you talk about how to hedge inflation, Ladi, I think you and I have said this before. I think the only place that have beat inflation is the equity market. And as it stands, so it's still where they will keep on beating inflation. Now, secondly, when people talk about the pullback, are we going to get those corruption? I said the time we normally have those corruption is when you have the foreign investors that are pulling out a lot of cash out of the economy, trying to take it to the economy. As it stands now, foreign investment in Nigeria, especially in the equity market, is 15 years low. And so 95%, according to the NGS index, 95% of those that are in the equity market today are Nigerian. So the pullback, like I said, is just temporary. And we have retail investors like the pension fund administrator, high net investors. They are still there because they believe so much in this economy. So I don't think there's any cause for anyone for alarm yet.
All right, according to Mukhtar, no cause for alarm. But let's look at, well, you did mention his earning season. It's upon us, at this point. We've seen some audited and unaudited, results at this time. But let's take a spotlight on the audited, result we have so far. And that's talking about Geregu Power PLC. We see revenue 83 billion for the financial year 2023, up 74%. Operating profit, that's up about 110%. Profit before tax, you see that's 61%. Dividend proposed 20 billion naira. So looking at this result, Mukhtar, how are you seeing this? Looks quite impressive.
Very, very impressive because, but again, the other news is that the 20 billion dividend payout, 78.25% of that 70 billion is going to Femi Otedola. So the remaining people will have to share the percentage. Before now, the holding was about 95.55% belonging to Femi Otedola, but at this report now we're seeing that they're about 78%, and the other 1% I think is owned by most institutional investors. So if I'm an investor, definitely I don't think you want to go there now, because again the price has really gone up, but the results are fantastic. But like I said, the result is fantastic, especially for Femi Otedola. That will definitely keep him in the Fox 20 richest Africans for a very long time. In terms of performance, then when you look at the price, then you look at the sector that he plays, which is the power sector, and then you look at Transcorp, you look at the price Transcorp is at this moment, and then you want to begin to take a second look. So for Geregu, I think it's a good result, but like I said, the good result mostly favored Mr. Femi Otedola, the billionaire. So result fantastic, but again, we'll see whether there will be any game changer in them acquiring more assets in terms of, especially in the area of generation, which the government is saying that they will do a little bit of sales. They will maybe handing over generation. I think Geregu will want to play an important role there. I think for me, that will be the only way that they will grow their revenue. But not to forget that the electricity company has also increased their tariff, even if that has not come to the end user yet, because government is taking last chunk of that. Definitely when that comes in to the end users, and a lot of end users will find themselves paying more for power, that also will have effect on the bottom line. But now I think it's a good result, but like I said, especially for Femi Otedola.
Right. So looking at, other earnings that we'll be expecting, at this point, how do you see, these earnings shaping the investor sentiment, in this quarter?
Yeah, Laddie, sometimes when these earnings start coming, we realize that it has already been priced in by investors, and sometimes you don't see those capital appreciation that you definitely want to see. But again, I think, like I say, cash is king when you have an economy like this, and especially when you have liquid cash to reinvest into the market, and that's what most investors do with their dividend payout, especially those high net investors. So investors will be keen to get some of those cash, especially for this tier one bank, and also not to forget the conglomerate. Also, I'm sure their result will begin to pour in anytime from now, because if they are almost all of them are in a closed season. So definitely, it's a good time for investors. Most investors will start smiling to the bank, but like I always say, it depends on when you enter the market, because if you are in the banking sector, equity, you entered when Access Bank was at a low of 13 naira, and it's at a high about, even if it closed at about 26 naira, you still make a lot of capital appreciation. You want to take those dividends also to aid against inflation, which you have really talked about already. So definitely, I think investors will still be looking at those equity that we pay in cash.
Okay, well, it's the final trading day of. What are you expecting for the close of trade today, and what are you projecting for February?
I think when the close of trade today, I think there will be a little bit drawback. We might not see the kind of losses we saw yesterday, even if we might get there, but I don't think it will see some recovery from some major equities, especially the banking sector. In the month of February, it will all be determined with a trigger, and like I said, that trigger will have to come in terms of earnings that will hit the market sometime between February and March. So February, I expect the market to be ups and down, investors being cautious, waiting for that result. Once one of those results hits the market and it's fantastic, then you begin to see the effect on other equity going forward. But I think in the month of February, we'll see investors do wait and see.
Right, definitely a wait and see game. Let's see what February, has in its possession, because we know it's the month of love. Let's see if we're going to see some love in this market. Thank you so much, Mukhtar Mohammed, CEO of Financial Mukhtar. Thank you.
Thank you for having me, Laddie. You have a pleasant day.
You too. All right, so let's see what's happening on the unlisted market. 1,054 points, 2.84%. That's the jump we see there. For the unlisted market, we see the volume traded 92% down. Value, that's about 1,000%. Big jump there in value of stocks traded in the unlisted markets. 17 deals, 30% more, and stocks traded about 4 units at 42.86%. And we see the top trades. That's for the listed market there. That's for the NGX. Japan Gold, 59.79 million units. Transcore, 52.06 million. And we see Axis Core, 46.81 million. So countdown now. Going to see what's going to happen for the final trading day of January. So that's how the market is looking, and that's what we're expecting going forward for the close. Thank you for watching. It's back to the Sunrise team now.